Good morning, everyone. Welcome once again to this edition of the Real Wealth Solutions podcast. I am Darren Light and joined by my co-host, Greg Scully, as usual. Today, we have our guest, Tim Milazzo, CEO of StackSource.com. Tim, thanks for taking the time out this morning. If you would not mind, just give us a little background, a little bio, and we'll get started here.
Darren, thanks so much for having me. Greg, thanks so much. So I'm Tim. I'm co-founder and CEO of StackSource, as you mentioned. We're an online platform for commercial real estate financing. Our vision is to make commercial financing transparent and easy. We started and launched in 2017 out of New York City. A couple of software engineers and I kind of rebuilding commercial mortgage brokerage from the ground up, or I should say from the internet up. We are now more than $250,000 of financings in on our platform and growing quickly. And we're excited to continue growing and provide a service to make financing clear and easy for real estate investors.
I hope you do it. I really hope you do it, because it's a pain in the neck. Keep it PG.
Do you have like a one really bad financing? Like what's the worst thing that's happened to you in financing? Was some local bank that just like gave you a term sheet and then just yanked it away, or is it just like a general sentiment?
Kind of the worst thing, and I won't say that this is exactly what went down. Was it seemed like a little bit of a bait and switch between the term sheet and the final terms. Everything worked out in the end. I do wholeheartedly believe that there is no reason why there should be any miscommunication in what the terms are, because a lot of that is well defined, especially when you're dealing with agency debt. It's not like they have a lot of play on what's available. So that was it. And then general communication tends to be difficult. A lot of things are wanted in one direction, and a lot of things you can't get going in the other direction. Not a lot of things, but it does happen. So there's still a lot of people in it. There's still a lot of moving pieces, and it's not very linear. It's kind of all over the place.
We hear that most often with banking relationships where people have very little transparency into some loan officer that maybe their full-time job is not even real estate lending, and they're a business banker, but they're in charge of the local real estate lending relationships, but they really don't understand what could be approved or denied at credit committee. And there's these people in the credit committee that actually hold the power and the keys. And there's a disconnect between that and your loan officer. So we hear that less often for agency, though it certainly can happen. And if you have that happen in the agency world, even worse, because it's supposed to be a box handed down from Fannie Mae or a box handed down from Freddie Mac, and they're kind of working within the box and pulling the levers. But I mean, this is something, retrades are some of the most prevalent, common, and like most devastating problems with real estate acquisitions.
Yeah, and we did have that happen actually at a community bank level, where very late in the being under contract, the credit committee didn't approve the loan. So we had to make a very last minute transition to some other kind of debt source. So yeah, that absolutely is true, that just because your loan officer is giving it the green light, he's not the green light in many cases.
Yeah, agreed. That's one of the worst problems in this industry, especially for newer investors, because when you haven't had the 10 years to work through and sift through different relationships with different loan officers at a regional bank or different local banks and knowing which ones to trust, I mean, that presents a real hurdle, right? In getting into the industry, trying to win the trust of your LPs on the first deal. And, oh, that term sheet we told you about 3 weeks ago just got yanked out from under us. And that happens. And it's one of the worst things that happens in this industry. If we can bring transparency to just that, who are the trustworthy loan officers? Who are the banks that don't retrade as a habit versus the ones that do, and the ones that are comfortable retrading because they're trying to get you in the door with a piece of candy with a sweet term sheet. And it's a higher rate at closing, or it's less loan proceeds. Less loan proceeds may be the thing that kills more deals than anything else with a local bank, because they say, we can lend up to 75. But oh man, there are so many caveats behind that 75 LTV. These are the types of simple things that we say, okay, well, you should be able to give feedback on your experience with a loan officer and your feedback with a bank. Why are there no 5-star ratings for which bank in Tennessee that you can work with? And this one's 3.5 stars. Let's read a couple of the 1-star reviews. You can do that with restaurants. You can do that with your driver. Why can't you do that with your bank?
Yeah, you could do that with a $40 transaction.
Yeah,
but you can't do that with a $6 million raise.
Is
Right.
that
Potentially
something,
on the line.
is that review process, Tim, something that you're offering through StackSource, or something that you're saying? And then sort of a additional question, as you're allowing lenders to be found through StackSource, how do you vet those people? What criteria, how do you know they're checking all these boxes that we want to see moving forward?
So first, I'm going to advocate for why commercial mortgage brokers ever existed, because we're trying to make that process better. But honestly, I've got to give credit where credit is due first. Commercial mortgage brokers, the whole role of having somebody that makes a fee off of financing, and why it's existed and why it's persisted so long. And actually, in the industry, the share of financing transactions that are brokered versus direct to lender, the share is going up. People are brokering their loans more often now than they were 5 years ago. And the reason is, if you have somebody that is working day to day in the capital markets, you get two dynamics. One is they get to know, even if they don't publish it as some ratings on some lenders, they get to know how lenders operate, how entire institutions operate, and how particular loan officers operate. They may have decided, we're never going to Steve at XYZ Bank ever again. But, Bob at XYZ Bank, he's going to give us the straight story. We know he can't get everything approved, but he's going to tell us when he can't. And so they've got that kind of information, and they have that bulk of experience. And because they're doing it every single day, where a real estate investor, you've got so many different components to your day. You've got LP capital raising, you've got deal screening, you've got analysis, and you have running your own properties. Somebody that's financing every day, they have that advantage. Second is, even if you do find the same lender, they're going to be a little bit more afraid to screw over a broker that has 100 deals behind that single deal they're talking about right now, versus one local real estate investor, where if they screw them over, maybe they tell their friends, maybe there's there could be reputational, and honestly, some people are too short-sighted in this industry. They should be thinking about their reputation more closely. But to bite the hand that feeds them the next 100 deals is just a grave mistake. And so commercial mortgage brokers have those kind of advantages. Now, they don't typically publish those things. They don't typically make them transparent. They keep them very close to the vest. Many brokers would feel like, my experiences, what's gone on for me and my clients, that's a core piece of my value. I don't necessarily want to open up the kimono on how that works. For us and our philosophy of transparency for StackSource. So we're at StackSource, we're taking commercial mortgage brokerage, we're putting a twist of, let's make this process transparent. You give us a property address, some information about that deal. We'll show you how many lenders you're matched to right now. Let's get you right to your matched lender list. We'll be forthcoming with the types of loan terms and the interest rate ranges available from each of those lenders. And we are going to be launching a feature for what are past experiences with borrowers. So we've been collecting that information for the last couple of years. What is our capital advisor on each transaction, think of each lender. What does the borrower think of the lender? Did they close on time? What was their average? And so we're going to be posting, and these are going to be features coming to our platform this year, actually. Average closing time, and what was the experience like from past borrowers. We didn't want to start to publish that information too soon where we didn't have enough information, but we've now closed upwards of 100 real estate financings. We're at about 130 deals closed right now. We have, several dozen more deals under contract right now. So as we're getting that bulk of information, we're going to start to publish it. So the hope is that, the platform can become a clearinghouse for what's really going on and what are the experiences that different people are having.
Yeah, I mean, when I looked at the site today, I'm like, okay, you're basically a commercial loan broker, was my first impression. But once the connection has been made with the lender, is the communication still through you to me, the borrower? In that, there still needs to be all the third-party stuff. How is all of that communicated? And then the other thing that came to mind is just the amount of paperwork that needs to be assembled and imported, from the sponsorship side, PFSs, are, real estate, schedules of real estate owned, all of that stuff. Is that done through a portal through StackSource? Is that the clearinghouse for the information?
Yeah. So good question, Greg. We do have the portal that you're uploading the same types of information that would probably be requested on like a drip email, back and forth. There's 50 emails about, oh, we need this attachment. Oh, we need that attachment. And truthfully, that stuff is still necessary to close a loan. There's still going to be the appraisal coming in, and there's going to be, hey, we got to get your insurance stocks and environmental, and everything else is going to happen. We've tried to build a really great platform for sifting through all of your lending options more easily. You'll get more lending options on StackSource. The idea is you'll get better lending options on StackSource. Actually, we heard from another multifamily investor recently that he worked with us to get a nice loan at a low interest rate, and he was very proud of it. And a property owner that literally owns the parcel next door, like they're part of essentially the same complex, went back to the same lender, didn't get the same rate, and now he's telling everybody, don't go use that lender, go use StackSource because they get you a better. And that's one example, but we're trying to build a great platform to get you the very best financing offers, and we stick with you towards close. But with financial institutions like banks and credit unions in particular, we can't mandate that they use like our digital closing process. They have to go through their own compliance and their own, and they're still going to have whatever form their checklist is in. We handle file management and help get the files in and the checklist of docs to get the right term sheets. And a lot of that is handled through the portal, but eventually it gets into the lender's process for closing. That's where the lender ratings come in. Are they efficient with this? How long is it going to take them to close? What are our other borrower experiences? Because StackSource does not direct lend on anything, at least at this stage. I mean, maybe years down the line, that will be something that we'll entertain, where we'll start to provide direct loans in an area where we have a particular advantage, or we see where the market is weak, or something like that. But right now we're a portal. We're more like a clearinghouse, multiple lenders. So we actually have 700 lenders that are active on our platform. You're never going to get matched to 100 lenders on a deal. I mean, it's based on location, size, leverage, asset scenario, what you're seeking out of the loan. But you may get matched with 15, 20 lenders on StackSource based on what you're trying to do. And it's about enabling competition between those lenders efficiently. And then, competition should bring down the cost of capital is the idea.
Is experience as a buyer one of the check boxes when we get matched to a lender?
It is so that's not like a filter we use to match the lenders.
Okay.
Like something layered on top where you can then see, hey, in addition to what their financial offer is, how good is the experience? But Yeah, maybe someday. Not today, but yeah, I guess if you're going on like Google Maps, you can say, hey, only show me places to eat dinner there that are at least 4 stars. And maybe we will layer that in at some point.
Yeah, I know that's important to lenders, most anyway, you know.
Oh, you meant not what is the buyer's experience of the lender, but how experienced is the buyer?
Correct. Yeah, that's what I meant. Sorry, I didn't make myself clear. Yeah, you know, like Greg and I have done 5 deals. If we enter your portal, would we have more opportunity to find a better lender and or terms as opposed to a first timer?
Yeah. Okay. Right. So that's a different question, and that's absolutely the right to bring up. Right. Experience, net worth, and liquidity are all important. So like for a residential mortgage, credit score and liquidity are important. For commercial, yeah, I mean, credit score is technically a requirement for like Freddie Mac, for instance. You're supposed to have a 680 credit score. At least one of the guarantors has to have that. But that's kind of like a due diligence item, right? It's like, let's make sure we have some credit-worthy borrower that's a guarantor here. The 3 things about the borrower are experience, net worth, liquidity. There are lenders you can only access on our platform if you have a certain net worth and liquidity because they're private banks, and their incentive for lending on these real estate assets is actually not just the cash flow of the assets, which is 95%. 95% of the borrowers on the lenders on our platform are looking for properties, right? Experienced sponsor and the properties cash flow. But then there's a segment of lenders that are looking for high net worth and liquidity borrowers, because not only do they want to lend, they don't really care about the asset. They'll lend on the asset and they'll give you a sweet deal. They have some of the lowest interest rates. They make it a requirement. Some local banks will make it a requirement. Oh, put your depository relationship on with us. You have to put 200,000 in a deposit account with us. For these private banks, they may say you have to move all your stocks and bonds into our brokerage account, and then they'll give you a really sweet loan offer. But if they know they're getting a few $1 million in stocks and bonds moved over, and now they're getting the financial advisory cut, that's actually their incentive. So different lenders have very different incentives for sure.
Different world right there.
Yes.
Yeah, because I was just thinking, this is another form of the democratization of a lot of things that have happened with crowdfunding in general. It's like you're opening the markets to a much wider segment of the population, where real estate was a very small group. It is still a fairly small group, but there are more people getting into it all the time. And you used to be, even a few years ago, still in the internet age, you were largely relegated to the banks in your region, maybe your zip code. And then on the agency side, and we'll talk about agency stuff a little bit more at length, is you didn't have access to a nationwide network of lenders. Even if you had a good commercial broker, they are not probably going to have potentially whatever it was, 700 potential relationships that are in the toolbox. So it seems like it opens the doors to more options. Are you on the agency? Are you guys a DUS lender, or do you just work with? Is it still just the commercial brokerage type relationship with the agency lenders?
Right. We are not a direct DUS lender at the moment. So for Fannie and Freddie, they both have very similar programs where if you originate the loan and then you're expected to service the loan, right? So you'll be taking loan payments, and you'll be the first point of contact if the borrower has any questions, or you'll be the first line of defense if there's a default and all that. So so that would be the seller servicer or the DUS licenses. So StackSource is not one right now. What we do for originating agency loans, we have relationships with those that have the DUS seller servicer licenses that do it wholesale through us, right? So actually, if you use for Freddie Mac SBL, for instance, a couple of weeks ago, our big announcement was you can get instant Freddie Mac SBL quotes on our platform, and you don't need to be under contract. You can get a quote, a Freddie Mac SBL quote as many times as you want. Go screen 24 deals, get a Freddie Mac quote for all of them, right? And you can screen and use it. Now, when we then actually originate that loan, then you come back through StackSource and say, okay, well, here's the property I chose, and I want to move forward with that Freddie SBL loan. There's no origination fee. That's because we work with a wholesale license holder that, we're kind of, we've worked out the situation on the back end where there's no origination fee. You're getting there at par. So if you see for that property, oh, StackSource is calculated, it's 3.89%, 30-year AM, 1-year IO, here's the prepayment penalty, here's my max loan proceeds. We can generate a term sheet for that. There'd be zero fee, and it would be, kind of take it or leave it, because we're not negotiating fees, because there is no fee to the borrower. On the borrower side, we've worked it out with a wholesale agency lender.
Okay. All right.
Nice.
Right on. Yeah, because that can be, from the acquisition side of it, you do your initial underwriting, you decide this might be worth pursuing, you go to like a level 2 underwriting, and now you're getting serious about it. Now you're like, now we want to submit an LOI. We have to make sure our lending assumptions are valid.
Mm-hmm.
And sometimes hey, can I get a quote on this? And they start wanting a PFS and SREO from everybody that's going to be involved. You're like, I don't necessarily have the entire sponsorship involved out because we're not under contract. So I would be very appreciated myself of having the chance to, in the early stages or mid stages, I guess, of underwriting before you're under contract, to be like, let's substantiate my debt assumptions across numerous quotes potentially to make sure that we're making the correct assumptions in our pro forma. So that alone, is, and if it can happen very quickly without having to upload a bunch of documents, then it goes to the senior underwriter, and they're in Orlando at a conference. They'll get back to you Tuesday when they get back. Those things happen more frequently than you would hope. And it's just, just because people are people. I get it, but
and if you're not the $75 million deal at the top of their stack, even more delay.
Right. So
good point.
Yeah. Is that one of the major differentiators that you see for StackSource, and maybe what are some of the top 2 or 3 that maybe we haven't talked about yet?
Yeah. Honestly, you're on that track exactly, where why can't we get instant transparency is like a key question. Like, we like thinking about the way we're developing our product as questions like that. Why can't this be done is like a key question for us. Why can't you get a quote right now? Why do you need to wait for your loan officer to finish his round of golf? And truthfully, small deals. I mean, that was a big way that we got going. And I mean, we had to find some cash flow as a startup and like get this going. The first 50 loans we did were all less than $4 million, average size of like $1.5 million. I mean, the smallest loan we've done was like $200,000. You'll never get a traditional commercial mortgage broker to help you on a loan that small. Because we can automate pieces of the process, our package that goes to lenders, the design was built, in the past by, a tech designer, where now you enter the right information and it populates that template. An analyst at a big mortgage brokerage shop would have had to build that from scratch again in a PDF. And so we've automated pieces of the process that just hold up and like make the process more difficult, especially for smaller investors. So the first 50 deals we did were all small balance. We're now getting to the point where most of the market share that we're gaining is in like the $5 to $50 million loan space, though we keep cranking out the small loans as well. So our average deal size is going up. But now that we've made a little bit of a name for ourselves and we've gotten a bit of traction, and now that instead of the first 40 banks on our platform. Now we have 700 lenders on our platform. We've been rising, but transparency, efficiency, always going to be our advantage. We want to use those advantages to help our clients to do things quicker, less painful. So those are the banners that we live under.
Talk about the dashboard a little bit. And I didn't see it completely play out on the website. You're able to view the different quotes, I guess in real time, just kind of laid next to each other. And I believe you can enter some of the NOI and expense information to see how different, how the different quotes will actually move the needle on the return side. Is that correct?
Yeah, so we've got another screen on our platform, which is the loan analysis screen, which you're referring to. So there's like a comparison, kind of like a mortgage broker might send you an Excel with like the loan options lined up, and we have a screen like that. But then you can drill in, and you can press the analyze button once you've gotten multiple loan quotes on StackSource, and that's right. You can enter different NOI assumptions, and again, this stuff is just math, right? And it's math that we taught our platform to do. We've got the interest rate, we've got the amortization, we've got the loan proceeds. Let's try different NOIs. Let's do different, exit scenarios. Well, what if we sell at the end of this loan term at a 6 cap? Well, what if the market's in a different spot and we are selling at a 7 cap? What's my IRR? What's my equity multiple on this deal? That math is kind of automated, and you can plug and play different assumptions. So that's another feature. That's one that kind of assumes you've gotten multiple loan quotes already. So that's something that you don't necessarily get on the front end of entering a loan request, unless it's one that has instant loan quotes available, like a small balance multifamily, Freddie Mac SBL, you'd have that. Until now, we have this browser extension, which we just launched, where you can bring that type of math, that type of commercial financing calculator with you and activate it from different commercial listing websites or from brokerage websites. So you can be browsing a commercial listing, and you can say, okay, well, what if I used an 80 LTV Freddie quote, or let me enter custom, loan assumptions, and what would that do for my deal? And then you can do that quickly, and then it's kind of like you could play with it. It wouldn't necessarily be like final loan quotes from the browser extensions, but it would let you play with that quickly, rather than the back of a napkin, or on the other end, building an entire Excel to do it. It's kind of an in-between. Let me screen a lot of deals quickly, and you can play with different assumptions. The Freddie Mac instant quotes are there. And so for that one loan product, you can get a real live loan quote. For bank and credit union, you're kind of getting an interest rate range, and you have to plug in assumptions.
Okay. Well, even that's useful, though, to make sure that you're within the range, and then you can always just plug in the high range and be like, okay, well, what does this do to it? I was curious about the closing process, because that can be a huge pain in the neck. Is that through the platform as well? In our experience, seems like every deal goes to the wire, and there's a lot going on for about 2 days. It's kind of all hands on deck. Don't leave your laptop or your phone, because somebody's going to need something at the last minute. And that, the closing process in some states, I think, is still incredibly antiquated, with like wet signatures and things like that. It's like, what is happening? Am I still actually relying on UPS to deliver these documents for this loan to be closed? I mean, that was the reality of one of the closings. Like, it had to get to California, and now I'm just handing it off to somebody, and it's completely out of my control.
Yeah.
So what does the closing process look? Is that something that, unfortunately, you and us are still subject to the current status of the industry? And if so, man, how are you going to solve that?
I think the closing process is wildly complex because it just keeps, like, you just see vestiges from the past with the handing off the documents and, you know, that county needs the wet signature. And I totally agree. The closing process does not happen on our platform today. I wish I could tell you it did, but that is typically run by either the title company that needs to make sure, hey, there's not some hidden lien or something that, you know, blocks the closing, and or by a lawyer that can act as a title agent in many cases, but typically by a title company. Here's where I'm going to plug the prop tech ecosystem at large, rather than just StackSource and the part that we have to play. There are people really working on solutions to this. Part of it is building technology that makes this better. And I'll say online notary. Online notary is like one of the best, you know, chances we have at making this closing process. Like notarize.com just raised another round of funding. And like, I've used them personally to like notarize stuff. And especially during the pandemic, it's like, who's going out to a bank and oh my goodness. And then, you know, it's been so painful. Notarize.com, I think, is great, and online notaries. There are people working on like just digital closing rooms. One that comes to mind is ProDeal. I think their name was ProDeal 360, but now their name is just ProDeal, and they have like a digital closing room with like, it's a dynamic checklist, and like documents go into the checklist, and you know it makes sure that things are complete. There are prop tech companies that have tried to build a blockchain solution to this, though admittedly, the average person doesn't even know what that means. I'm probably not that much better. And the county clerks know nothing about that. And, you know, it's not even going to be close to adopted. So there's a building problem. I think it's less of a building problem, and I think it's more of a regulatory and adoption problem. There are all these different agencies, and with a real estate closing, you're crossing different lines of the municipality holds the power on part of it. The county holds the power on part of it. Then there's state and federal, and like getting new solutions adopted is quite difficult. And then there's just the bank, if you're using a bank or a private lender. I'm seeing private lenders work a little bit quicker towards like adoption of this because they have less like IT and compliance and like regulatory hurdles to overcome. And so I think more private lenders are adopting digital closing rooms. Not all of them for sure, but it's going to be a years long, decades long process to get to digital closing. I mean, even for residential mortgage, it's taken a long time. I think the closest that we see, I think at this point, is probably Rocket Mortgage, because it's the same company as Quicken Loans. They're now worth $40 billion after their IPO last year. And even still, they're going piece by piece from online signatures and notarizations, and they're still not at a fully digital closing.
Can you see StackSource having its own closing room at some time in the future? And I mean, it could be years down the road, or is it just not something you want to mess with?
Maybe. I think we could knock out hey, let's build the design and the technology of this. Do we really have the stomach to not only service our clients and help them find the best financing, but then fight the battle to get lender by lender by lender adopted, and then county clerks and title companies, and do all of that coordination is difficult, versus being a cheerleader for those prop tech companies that's their sole focus, and they're fighting that battle, and that's their battle to fight. So maybe we do something like, in your lineup of lenders, okay, now we're layering in ratings, average closing time. Maybe we layer in another component, which is what closing process do they use? This one's pen and paper. This one's a stone tablet. That one is using ProDeal. And like, it's, you know, that's just going to give you an indication that it's going to be a little bit of closer, you know, better closing.
Man, transparency and accountability at its finest right there. I love that idea. This is what they do. Oh, okay. Well, we're not using them.
If lenders,
right. It's like, if you know you're not being watched, what's your incentive?
Yeah.
it's that kind of thing. It is still very much relationship business. So I think there is, if you are established and you do have the credibility and you've transacted numerous times, I think it only makes sense that you probably get the door opened for you a little bit wider than somebody just getting started. So it seems like that's, something that StackSource really solves for a lot of people is, how do I do this at all? I mean, where do I get started with lending and make sure that I'm getting a fair shake? Because you might, I think there's a tendency to go to a bank, you get approved and be like, sweet. And you may not even realize that, wow, they're charging, twice as much for some of these fees than somebody down the road, which I didn't ask. I was just so elated to have a yes. I just stuck with it. So I think you're opening that door for people to have a clear look of like, oh wow, I didn't even realize these options were available. Because it's hard to shop loans somehow, or sometimes, I mean, you simply don't have a lot of time. You're trying to close a deal. I mean, you're doing due diligence and inspections and raising money or whatever. You don't have time to do everything. So I think that's super valuable that shopping part of it is done early. Hey, it's Greg from Real Wealth Solutions. If you'd like to know more about our passive income opportunities, jump onto realwealth.solutions and hit that schedule a call button. We're always happy to talk about our multifamily and flip projects and to answer any questions you may have. Again, that's realwealth.solutions. We look forward to hearing from you. And now, back to the podcast. Who are you looking at as your avatar for StackSource? Is it everybody? Is it people just getting started? Who do you see benefiting the most?
So we started the business in New York City, and I grew up in the suburbs of New York City because my dad was a leasing broker, putting office tenants in like major office buildings in the city and, making a commission doing that. And that was especially good business in like the 80s when New York was having a renaissance. And for us being this fintech company that started in New York, we really haven't done much business there. I think we didn't close a loan in New Jersey, which is my home state, until like loan 110 or something like that. There are big brokerages that are, brokering the multi-$100 million office buildings and, condo towers and like New York and Miami. And the efficiency is probably less of a concern versus like the very close, tight relationships for some of those like mega developments. I think places where efficiency is going to not only be an advantage, but a must in the future will be some of these programmatic loan products. So why can't you have a quote now because it's just math and you're waiting for somebody else to do the math? I don't think that will persist. I don't think you can, justify waiting around for your agency quotes and, wait for somebody to get back from that conference in Orlando. So the places where I see a more programmatic underwriting approach would be stabilized multifamily. If your NOI is going to be the same month after month after month, you should expect fast, efficient quotes. Net lease retail. If Starbucks has promised to pay you for the next 15 years for that out parcel, that underwriting is as good as done. And probably small business real estate loans. So like SBA 504 type loans where it's a medical office, that doctor's making bank, he's deciding to buy a local medical office building instead of rent. Again, that underwriting, not only is like the doctor already making a ton of money, but the US government, SBA, the Small Business Association, has agreed to take down like the riskier half of the loan. Like that's an easy underwriting. So those are all easy underwritings where we can see programmatic quotes. Right now, we have programmatic quotes for one, and it's one subset of that stabilized multifamily. Continue to build automated quotes for all the stabilized multifamily. those other two categories as well, the single tenant retail and for, SBA, that's part of our master plan, and where I think technology has a particular advantage. And then, I think the addressable market is everything small to mid market, everything that's not the $100 million plus should be a little bit more transparent, should be a little bit more efficient, even if it's not an instant quote. I think you'll see bigger brokerages realize that in the next few years. We already see like a couple of big brokerages like now tinkering around with like digital lending platforms and, kind of dipping their toe in the water on this approach. But we're jumping into the deep end. Digital lending, bringing transparency that's our sole focus.
Yeah, I guess, I could see the appraisal side also being more of a programmatic type thing for at least a section of appraisal, because a lot of that stuff is just sitting there and is scrapable knowledge or scrapable data. Ultimately, somebody might be throwing a subjective view on it because, we're ultimately our people and we have opinions. And if that guy got caught off in traffic and his wife just left him, man, your appraisal might be a little bit different than if he's just driving his new car off the lot and just won the lottery ticket the day before. So there's influences that affect things that we may not even realize how much we're affected by them.
Yeah, I think the digital appraisal type, it's probably an overlapping set of where could there be programmatic quotes will be where can there be fast and very accurate appraisals that are 80% done by computers and a human kind of is checking and making sure. A human is going to say, what's the condition of the building? Like, let's go make sure it's not on fire. And, but hey, the comps and the data and, that's all kind of the math and data hookups that can be run programmatically.
Yeah, because I do agree. Each building is different. They're their own animals. They've been treated or mistreated in different ways. They have skeletons in their closet. And I think there will probably always be some necessity for somebody to lay eyes on them to at least confirm their assumptions, if nothing else. Just like, okay, yeah, it actually exists. Google Earth is pretty good, but you hear that just in general, people selling houses to people out of state that actually don't exist or they don't even own. So weird things continue to happen. So there'll always be a people role. Let's talk about StackSource just in general. As a startup, it's very exciting. We talked a little bit before we started recording. You're actually in the capital raising phase, and they're through. Part of the Jobs Act and crowdfunding. I think part of your whole business model is foundational on parts of the Jobs Act. There's actually an opportunity to get entry level without having to stroke a giant check and support and be part of StackSource. Can you talk about that a little bit?
Yeah, thanks for giving us the.
No, it's cool. I was looking at it last night. I was like, oh man, how much can I put in here? I'm like, this is awesome.
We love open finance, right? We love open, transparent finance, and we are now fundraising for everything we've done. Has been the first inning of online commercial financing, and we're entering the second inning now, right? There's so much to do. We have like 0.03% market share. Like we want to grow this business, and so yeah, we're fundraising. We have a fundraising page up on wefunder.com. So like wefunder.com/StackSource, you'll get to a profile and actually a video of me talking through the business plan and what we're going to do next. And why are we building something that's a loan quote API? And what does that mean? And what's that going to mean for our business? And like, we're actually going open with, here's our business plan. Here's how we're going to continue to build. And so I obviously as real estate investors and syndicators, this is something that you and your audience are very familiar with. I'm doing the same for StackSource. We're taking on essentially LPs and selling future preferred equity in the company. We are at 75% committed as of right now on that round. We've raised about 1.65, 1.7 million for our company. We're going to be hiring software engineers and designers. We're going to be continuing to hire capital advisors across the country and analysts. So we're hiring both business and tech side, and we're taking advantage of the Jobs Act and the crowdfunding, regulation crowdfunding. So we've had some of our smallest clients that didn't get, we had somebody invest that called 41 banks before coming to StackSource. We got him a term sheet within a week. He was closed within 60 days. And it was his first commercial real estate investment. And he invested a couple $1,000s in StackSource, which is, his ability to do it right now. And, I'm sure, he's going to continue to grow his real estate empire, and he gets to make a startup investment on the side. Minimum investment's $100. We're really trying to open it up to everyone. Our lead investor is putting in $1 million. So this is not like, oh, well, we need the crowd to give us money where a larger investor couldn't or wouldn't. So we actually brought a lead investor to the table that's doing $1 million. And those are real estate executives and, people that were the earliest investors in what are now major investment sales brokerages. But alongside that $1 million lead investor, we've opened it up to everyone, and we've had a number of clients participate.
Yeah, it's exciting to see. I mean, it's just, it goes back to that democratization of opportunity that, prop tech or, just the internet in general has done for people. And it's, in my mind, it's kind of like, I'm not comparing it to crypto in any bad sort of way, but these opportunities are interesting for the asymmetric gains for very little downside. You have the opportunity, hey, if this thing blows up, you're going to have tremendous return with very limited downside. I'm sure it's in the disclosure somewhere. You also have the potential to lose all of your money, which is just part of every syndication that we do. That's said often and sometimes in bold type. So, that reality exists as well. But I think I just think it's super cool, just in general. I'm like, it is so cool that this used to be a very closed industry for startups and VC kind of stuff. I think still largely is, but the fact that you can invest with Tim for $100 and maybe participate in some upside. I think that's pretty cool. And it was a fascinating site because I was reading all the questions in the FAQs, and there were some people in there like, this dude knows a lot about the Jobs Act, and he was hitting you with some technical questions. I'm like, all right, that guy clearly knows what he's talking about. And then there's others that are just like, I think this is cool.
Yeah.
Go for it.
There's a good mix of like people that have already used StackSource to get financing versus people that are interested in fintech or just interested in startups in general. We've had checks as small as $100 and as large as $100,000 come in from people I have not met in person.
Well, and to Greg's point about the FAQs that were on there, the guy asking that question, you don't have to, goes back to StackSource's transparency. You didn't have to show that. I mean, I don't think you do. Just saying transparency. And I think that's awesome, refreshing.
We love transparency. I actually just made a small investment into WeFunder as a platform. WeFunder is raising money on WeFunder.
Oh, really? I heard, who's the Mr. Wonderful from Shark Tank or something?
Oh, he has another one. I think
he has one that he started.
Seed Invest.
Yeah. Yeah. So there's multiple ones out there. I mean, there's real estate crowdfunding. I mean, where you can, yeah.
Yeah. And then there's portals that can let real estate syndicators give a portal to their investors as if they are a nice, like, kind of crowdfunding platform. And those are growing. So there are several in that kind of category of, let's give our investors, a lot. And I think there's a tipping point where if you have a certain number of investors, either you're doing like a ridiculous amount of like manual work on like tax compliance and like keeping them updated, and you reach a certain threshold of investors and you if you have 100 different investors to keep up to date about a project, it's like, all right, let's give them a portal where I post the update once and it syndicates that update to all of them, and that sort of thing. So that's, that's another thing that's on the rise in the industry, kind of under the same header of like transparency and, efficiency.
All right. So what, I'm out here looking for deals, man. This one looks pretty good. What's my next step with StackSource? Is it a membership thing? Is it simply a login, create an account? Are there any fees, or fees only at transaction? Can you just go over a little bit of the actual process of onboarding, I guess is what it would be.
Yeah. Well, so we've got the new browser extensions tool, which is really, you stick this into your Google Chrome browser and you can activate that and use it as a calculator anywhere. But
okay,
that doesn't actually help you get a loan. That just helps you like size up deals, and it's a tool to use. If you actually want to get a loan, that's people going to stacksource.com and clicking get a loan, and that gets you into our portal, which is entering information about the deal, putting in attachments, and this is where, you're going to actually put in the rent roll and the T12 and, your SREO, and, we're collecting the documentation there. We're instantly matching you to lenders, and you need to get vetted and approved, so you're only basically the minute after you press submit, it's going into our queue. You're going to get assigned a capital advisor. So, okay, I'm matched to 19 lenders. Am I going to have to talk to all these people? Are they going to be calling me? This is even worse. No, you have one capital advisor that you're talking to. They're going to they're going to coordinate the entire process. They're going to see what's missing, to make sure that we're getting the best loan quotes, and that first look with lenders is key. So it's like, we don't release it to those lenders until they press, okay, this is qualified. This is like, they have a big green button, right? Basically. Once that capital advisor hits go, they understand what you're looking for. You've kind of talked about the structure. Maybe you've tweaked the request at that point. Maybe you're looking for something slightly different than what was described, but you sync up with your capital advisor, they hit go. Those lenders are reviewing. You're getting quotes back very quickly. Often that same day, you're starting to get quotes back from lenders. Obviously instant if it's within that strike box of the Freddie SBL. You choose a loan program to move forward with. You're getting a term sheet, and you're on towards closing. So that's kind of our process. No fees to use the platform. We get paid at close.
Okay, cool. I was deferring to Darren there. I was just seeing if he was going to come up with something.
Oh, was that the look? I didn't see the look.
I'm just wondering, you're sitting on something or not? We can edit that out. We won't, though.
Use that as a soundbite. Let's talk a little bit about Tim personally and just mindset, and maybe something you do on a daily basis, regular basis, to keep yourself fresh, keep yourself centered, motivated, inspired. Is there something you do daily? What's that look like for you?
Yeah, because this is such a huge undertaking. I'm just fascinated by it. I'm like, how the hell do you start a software company that's going to disrupt an industry potentially? And in real dollars, I mean, you've done $250 million. I'm not poo-pooing that at all. You're new, you're growing, but there's deals that sell for $250 million. So, I mean, this is a young business. It's growing. You're doing a great job, but I mean, you're just at the tip of the potential iceberg, really. So it's a lot to undertake. How do you function?
We're just at the beginning for sure. But I mean, there's been talk about the other side of the iceberg. To get to that 250, there was all the foundational work on the platform and figuring out the right go-to-market approach. And so we've been working at this, and now it's finally started. We're seeing that curve, and we're seeing it accelerate. And, we are expecting to do more business than our lifetime total this year. So it's accelerating for sure. Now, on the personal front, I'm a big believer in good daily and weekly rhythms. I'm probably not on top of my game perfectly at the moment because I've got a couple of twin babies that wake up too much. And usually I'm like waking up in the morning to whichever one. Like this morning, I think it was 6:30, not crazy. One of them was awake. It's mixing some baby food and giving them breakfast. And that was how I started off my day. But in an ideal world, and what I'll get back to as they grow a little bit and learn to sleep a little more, is I'm starting my day with a little bit of, I actually think it's a good idea to start a day with some exercise and like just get your blood flowing right away. And I think it teaches your brain to wake up more quickly if it knows like, oh, I've got to do some exercise right away. I'm not current on that habit, but that's something I hope to get back to. I do a little bit of spiritual stuff in the morning, Bible study, prayer. I think different people have different spiritual practices. Those are the ones that are key for me for sure, and ones I believe in. And getting yourself in the right mindset. And if you think there's, hey, what's my big purpose in life, and getting in line with that each day. And then when it comes to work, having some goals written out, being able to physically cross those off of a checklist. I still use for all the fact that we're a tech company and we have a lot going on online. I still have a notebook where I'm physically crossing out, things that were my priority for the day or for the week. I like podcasting. I like ebooks. I was a big consumer of podcasting and ebooks when I was commuting. I'm no longer commuting. I'm primarily working from home in this period, but I try to set aside some time for some education. So there's some input and it's not all just output. Those are a few things that, are top of mind for me, though in different seasons. Like right now I'm in a season where I'm really not on top of the morning routine game, even though I'm a big believer in it. I'm going to get back there, and I kind of recognize, okay, there's going to be seasons where you drift in and out of being able to do it. But if you're able to do it, if you're healthy, get on the exercise. And actually, even if you're not healthy, do the exercise that you can do, unless there's something seriously wrong. Because I find when I'm exercising, when I'm in the right mode mentally, actually exercising helps put me in the right mode mentally. So those are a couple things that are like the big things. You have to get rest once in a while.
Good luck with that with twins.
Yeah, but you need to find ways to break away.
When they nap, you nap. That's it.
But even time away where like you get away from the business for a couple of days, you got to find out life is a rhythm. You're not like a race. You're not sprinting the entire time. I mean, this is very much a business is a marathon, just like life is a marathon. And you need to take breaks. You need to get a drink, and you need to keep yourself healthy, or you're not gonna be your best while you're running.
Yeah, absolutely. I'm going to Alaska for 10 days here in April for a lot of those similar things. I'm like, I'm just gonna go hang out.
Are you gonna be like in the mountains with like a beautiful...
I actually am. I'm gonna be at a buddy's cabin in the middle of nowhere for like 5 days, just snow machining or whatever.
That's amazing.
But yeah, I mean, you're absolutely right. At some point, you just got to check out and reset. They do have cell phone coverage now, so I'll be available and probably work a little bit, but not as much.
That's fun. Now you lived in Alaska. Is it where you used to live that you're going?
Yeah, we were there 40 years. No, well, the cabin's not, but yeah, I'll be going to one of my kids is still up there, hang out there a little bit, and then go check out and tinker around the cabin for 4 or 5 days. And
you have some pretty good mountains in Tennessee.
They got trees at the top of them. That's the joke.
Yeah, they're different.
They're different. They're round. Yeah, it's nice around here. So. All right. Tell us about StackSource one last time. Where do we find it? How do we get in touch with it? How do we get in touch with you if we want to, like, if you're on LinkedIn or whatever?
Yeah. LinkedIn, Facebook for sure. So LinkedIn/Tim Milazzo will be me. Facebook.com/Tim Milazzo is me as well. StackSource.com. So it's like it sounds, but STACK, Stack, SOURCE, source.com. I'm Tim at StackSource.com. I like to keep them simple. So that's all our links.
And check out the WeFund thing. If nothing else, just it's super interesting to look at that site and see what's going on, not only with StackSource, but just, some of these other opportunities that you may not have even realized are available to you as just a regular old person. So I think that stuff's really cool. Darren, you got anything else?
Nope. Just appreciate the time.
All right. I'll take us out. Thank you all for joining us again on the Real Wealth Solutions podcast. If you found something in particular about this episode that you think somebody would benefit from, we appreciate you sharing it with them directly. And as always, reviews and subscribes, is that the right word, are welcome. Thanks again for your time, Tim. Darren, see you at the meetup tonight.
Absolutely.
Maybe we'll move some trash at the landings as well. So
we do.
See you all on the next episode.
Thanks, Tim.
Thank you.